Hi, everybody. How's everyone doing today? Good day. So, first of all, kudos to Blake, and he shared this with everyone. Hold on a second. Good morning, Brock. You guys could hear me, right?
Yes, coach, we can hear you. Good morning.
Thank you, buddy. All right. So, Blake was talking about cable yesterday, basically talking about we couldn't even retrace 23% in here, calling this a flagpole. Our subscribers are long from yesterday from the 3rd. Nice trade, Blake. And I don't know, I never was a big fan of this, but wouldn't this on the daily be a golden cross? Hi, DJ. Where's Sell your old school, Steve, your old school. Isn't that where the 50 crosses above the 200 on the daily for a golden cross?
Golden Cross. Yeah,
Is it?
baby.
Huh?
Yeah.
That's
Yeah,
Isn't that what this is?
I think so.
Okay, so okay. So, great call, and you know what? It's not just that one, okay? Lakers, doing okay on Aussie Yen, Greg, Aussie Yen, Kiwi Yen, Andre. Look, Andre's got a nice short on from 31.23 to 32 in the S&Ps. Good job. Greg is looking for 114. Stelios, Macro Man, don't lose faith in him. Okay, so I just want to talk about a couple of things before I turn it over to the team. And yeah, I didn't. So let me get rid of the. Tell you what, I'll just get rid of this. Okay. So yesterday, while the S and P's were cratering, we got this candle here in crude. It was right here. While the S and P's were cratering, crude put in a higher low. To me, it looks like a C wave. This is where I remember I was complaining I missed it last week because of the Friday and at fib resistance. So I'm looking at this again. I'm an amateur, but maybe this was ABC for B, and now we're getting a C wave. So I think it's worth a shot between here and 7.5, risking the highs. If this was real, there's a big break coming in crude, so that could be a good attempt. And also, you kind of have an ABC, and I was looking at this in the S and P's, and it was a great break. I remember talking to Steve saying, "Don't you think 3150 is a good sale?" Well, yeah, it went to 58. Was a good sale, but this looks like ABC. And maybe that's what we're getting here, similar to crude. They're correlated at times. If we can penetrate this, um, I think this is going to be a great shorting opportunity between, I don't know, 31.18 to 31.30 in here. We have to risk the highs. So this is about a 90 handle decline. So if we get up to 31.20, that's going to take you, just equality is going to take you back to this area that everyone's talking about, calling the 30-30 level a breakout. So here's a kind of a horizontal line on it. And then if you get a fib extension of it from up there, then you could get it down towards these moving averages here. Look at what it held yesterday. Almost got back to this throwover line, closed above the first one. So this could be a great failing rally to short next time through these lows. I think you have a shot for not just 30-30, but for us to see a 2900 handle coming up here. So maybe use this trade optimism if they continue to carry the market higher. As long as we don't close over 3118 by Friday, that's a 2-week off number in the S&Ps. You just count back a couple candles. That's what a 2-week off number is. You really don't have to be Albert Einstein to use it. 311980. That's going to be an important level, whether it closes above it or underneath it. And the only other real interesting thing is, and Steve was right about this, there have been a few false starts, but look at this EG now. So it couldn't break out, and now we have a throw under. All right, all kinds of confirmation.
Speaking of which,
Yeah.
Speaking of which, you didn't
Okay,
see that.
who had 6 minutes on the betting? I had 5, but he's on at 6. I'm kidding.
Speaking
No,
of which,
that was great restraint, Steve.
you didn't
Don't you
check.
think so? That's a record.
You didn't check the close patterns in play because my target got hit today in that short.
Oh God, I don't know. I had that written down
Mm-hmm.
to do this morning. Go to close pattern in plays.
Mm-hmm.
I compliment you all the time. Look, everyone knows it. Who besides me thinks Steve, besides maybe talking a little bit too much about
Stop
being
it.
a professor, is a great trader and analyst. I do.
It's been a tough year for everybody, but that was just following the previous trend. I mean, we had a nice triangle, so with this kind of market, you have to be nimble. I mean, I've adjusted my trading style to look for smaller targets because you see how these markets are. They fail to produce follow through very often. So you have to go with what you get.
It's been such a tough year for all of us living inside with plumbing and food in our refrigerator and relative safety outside of our door. Pretty tough to hack, don't you think, guys? What a tough year sitting here playing computer games with money and candles. What a tough life. Oh
Western
my
world problems,
God.
huh?
Oh God. Oh God. Here's my I'm gonna trade in my guitar for a violin. Anyways, so I'm done. How are you, Blake? How's your tough life going today?
Oh, I was letting Steve. I was letting Steve go on and on and on and on and on.
It's been pretty tough, huh? I mean, how many? I mean,
I
which
bet
vacation
he's
that
a
you
happy
took?
guy.
Hey,
He's
which
a happy
vacation you
guy.
took, Steve, was the toughest?
The toughest vacation?
Yeah, see, it's an oxymoron.
No, actually, it isn't. We had the first vacation we had this year was quite tough because my wife was
sick.
Sick she was really sick. So not only it was very tough for her, but I had to go around the little guy, solo. But
anyway.
in general, Blake, I bet the weather is ideal now there, huh?
All right, Blake.
Yes, the weather is great here, but we got way more to talk about than the weather.
Go ahead, buddy.
Indeed.
Thank you, and Steve, great trade on the euro pound, by the way.
Yeah.
The
whole team's hot, Blake.
Well, I mean, it's been. Let's not exaggerate the fact. Let's not ignore the fact that this has been a very challenging year. I'm sitting here. I just closed out of my pound dollar long at 84, and I'm adding back on dips. It's just not dipping. I'm sitting here in this New Zealand yen. This thing just popped back up in my face to the 618. Matter of fact, if you guys want to fade this thing, this is the place to do it. I'm just saying, if you're a seller, I just added a little bit, so I'm just letting you guys know. But if you're a seller, the 618 is probably a good level, because the risk is you got this downtrend line and the 200-day moving average, and it all comes in 30 pips above the highs. So if you want to sell the New Zealand yen, this is the place to do it. I'm a little frustrated because it was trading down at the 60s last night.
How would you recommend they manage risk on a trade like that, Blake?
Well, you can put your stops right above the 200-day moving average, if you want. trade if you want to take it. You know, you just
Okay.
you know, it's not a lot of risk if you think about like the risk versus reward, especially with the shooting star yesterday. Here, let me pull that over here. You can see the daily chart. As a shooting star yesterday, so while it's up here, it's probably a good short. And then you can, you know, you risk right above the 200-day moving average, which comes in around, you know, 71.30. So what are you
Thanks,
risking?
buddy.
35 pips to maybe make a move back down to 70, which risking 35 pips to make 90 pips.
3 to 1. Yeah.
Yeah, I mean, it's not a bad risk reward. Let's but let's talk about the cable. So the cable's just ripping. This is one of those situations that it's not going to let you back in. I'm hoping it will, but you know, there's so much pound buying right now. This is a pretty big short squeeze going on. You know, and I want to buy it on dips. If I can get a dip back to 130.50, I'm gonna, you know, I'm trying to get long. But flip side is and you got to keep in mind to this is you know, this dollar weakness that you're seeing in the pound might really start to bring on more dollar weakness against other currencies as well. You might start to see the euro rally, and the euro is this is a big setup, guys. I'm just gonna tell you right now, this is a did I blog about it yesterday? I can't. Oh, that was active patterns in play. I was following what Dale was saying earlier. Let me go over to the blog. Oh no, what I did blog yesterday was the dollar index. Okay, dollar index, this double top here. Okay, but flip side to that is the euro dollar. You know, you got a double bottom. What's more important about this double bottom here in the euro dollar? Do you guys notice this? Let me go over to the 4-hour chart. Let's zoom out a little bit just so you can see it. This is right here. Wasn't big, but it was a small false breakdown. So a false breakdown tends to lead to a breakout. So in this case, you know, you had a false breakdown, tends to lead to an upside breakout. With the cable making its move, you know, the risk of a move above the 111 level, more importantly, the 111.04, which is the 618 retracement, that's going to be big. I'm not saying that it'll do it right now, but remember, we have ADP here in just a few minutes. So that's obviously going to be a market mover. ADP, we are looking at, let me pull up the, where is my data flash? Okay, there it is. So we are looking for 140,000 jobs to be created, private sector jobs. So that number comes in a little weak. You know, we'll watch it here in a few minutes. But if that number comes in a little weak, like let's say 110, 120, you know, maybe the euro takes a stab at 111. There's a lot of momentum right now with dollar selling, so that's something to pay attention to. We'll come back to that here in just a few minutes. We have 1 minute. Okay. Couple other things to, well, I'll tackle something else. We have the Bank of Canada. We are testing the support right here ahead of the Bank of Canada. You know, we were testing resistance yesterday, and I think this is all, you know, just a consolidation ahead of the news. But watch the Bank of Canada today. They're not expected to make a decision on rates, but you know, let's go over to the dollar yen. But if they come in, you know, a little bit more dovish, then you know we could see the, you know, dollar Canadian try to break down if they're a little bit more, or dollar Canadian break higher. Excuse me. If they're hawkish, then you know we'll see the dollar Canadian, which is already testing support right now. So keep that in mind. All right, so we are 20 seconds away. You can see how fast this is versus Bloomberg. Oops, which is the number right here. Bloomberg has 135, so just FYI. Anything below 120 would be, you know, a little bearish. 67,000. Whoa. That's not good. 67,000. That, and see, it came out at the same time. That's not good. So let's see. The euro is taking a stab higher.
Cable 131.
What's that?
Cable hitting 131 now.
Cable is hitting 131. Yeah. So we're seeing some overall dollar weakness coming into the market. Dollar yen slumped a little bit. This euro is trying to make a move. Euro's near yesterday's highs. We really need to break above 111 for me to get too terribly excited about it, but it is something, you know, we have to pay attention to.
Nice trade, Grega.
No, I don't know what Greg is doing. What's he doing?
It's a PIP long euro.
Oh, good. Yeah. Okay. That's I'm putting in a pattern in play. Just so I'll just tell you guys what my master plan is: a double bottom. But more importantly is if we get a breakout above 111.04, that puts us above 112 on a double bottom. Above 112 is above the 200-day moving average. So if that happens, then I am going to be a euro dollar buyer on dips on every dip if I can find it. So just for future reference.
If that happens, I'm not sure you're going to find any dips. The market's still very bearish. We might get like a epic squeeze.
Yeah, I think a squeeze is quite, you know, likely in that scenario. If the euro really breaks higher, I just think the, you know, pullbacks or consolidations will be very minor. So, but you have to be a buyer if that actually plays out. So if we do break above 112, you know, it would look something like this. Yeah. You know, we break above 112 and then, yeah, you just got to buy dips, you know, as many dips as you can find, as, you know, as best you can find. So, I mean, you know, question is, will we get them, and, you know, what they're going to look like in the event that happens. But I am bullish the euro above 111.10. Let's put it that way. And we are, you know, I started establishing a long yesterday, but it's not as big as I want. You know, I just want to be aggressively long on a break above 111. So that's the setup for now. That's kind of what I'm looking at. Cable continues to rally. Aussie, let's see what the Aussie is doing. Aussie's coming right up to some resistance. And the futures are up right now due to, you know, there's some rhetoric overnight with the optimism that a trade deal will get done before December 15th. There was a Bloomberg article. I'll show it to you. It's right here. So, you know, U.S.-China moved closer to trade deal despite heated rhetoric, and they said, you know, it's basically Donald Trump just posturing, you know. But we'll see. I'm not sure if I'm a big believer in that. I think if he was really, you know, watch the Kiwi here is going to try to take out highs. Remember, the Kiwi's getting close to its 200-day moving average as well. Is the New Zealand dollar, maybe about another 10 pips, and we hit the 200-day moving average. But, you know, I'm not sure if I'm 100% in agreement with you know, the rhetoric just being heated up ahead of, you know, just trying to put some pressure on China. I actually think that there is a reason why this was you know, said the way it was said. So
you know, Blake, your review on the currencies so far is a description of broad dollar weakness. Commodity currencies, the European currencies, really across the board. So, you know, it's always more positive about a trend when you have participation of many different instruments that are not completely related, going in the same direction.
True.
Haven't seen this in a while.
Yeah, we haven't seen it in a while. And what we are seeing is one of the other things that I think we need to pay really close attention to here is we got to pay attention to gold. Gold's not far off from, let's look at gold here. you know, we're not far off of really breaking out. And, you know, gold, man, if this thing breaks this 1490, forget about it. You know, it's gone. And then that, you want to talk about dollar weakness, and you know, how real will the dollar weakness be if gold breaks out? I'm really watching 1500. You know, 1500 is a big deal to me. uh you know, big time. So, you know, again, it's just something that I think all of us should be paying real close attention to. And again, you know, for today, the euro dollar 111, it's big. We're gonna find a lot of resistance up here. I'd imagine if you're a euro bear, you are trying to sell it up here. If you are a euro bear, this is the best risk reward you're going to get, really, right? I mean, you look, you know, again, I'm not here to tell you, you know, buy this, sell that. You know, I have my opinions. I tell you what my opinions are. You can, if you respect what I do, then you can take them into account. I happen to be a dollar bear. The reason why I'm a dollar bear is because I think stocks are going to sell off following a China US trade deal, if there even is one. And the sell-off in the dollar is going to be predicated on, you know, closing of euro carry trades, and I think that the euro is susceptible to a squeeze. You know, is the euro going back to 140? Probably not. But is the euro going back to maybe 115? That's where I you know, think it is over the course of the next few months. And you know, that's my opinion. Again, it may be wrong. It may, you know, I may be totally off base. Maybe the dollar ends up being the safe haven currency of choice. Again, I doubt it. But that's my view. And if you're on the other side and you're like, no, I think the euro is going to, you know, below parity. Well, this is your place to sell it. This is the spot you want to be short the euro right here, in my opinion. So because it is the best risk reward you're going to get. You can just short it right here and put your stops above 111.10. You know, that's pretty good. You know, you're risking 15, 20 pips to make, you know, whatever, if you know, wherever your targets might be. But those are the types of setups that if you're you know, if you're bullish, if you're a bull or bear. And look, I'm a firm believer that you can be bullish or bearish, and you can be opposite the same, you know, ideas as me, and still make money. It's just, where do you position yourself when you're, you know, taking that, you know, trend, you know, trade? You know, are you are you positioning yourself with the best risk reward possible at that point in time? And as long as you are, you know, you can be wrong. I'm wrong all the time. You know, as long as you're wrong and you can manage your risk, then that's the most important thing. But anyway, enough of me preaching. You know, today we have we just had the ADP non-farm. We have the Bank of Canada rate decision. The market is not expecting the Bank of Canada to move on rates. The question is, where are they going to be more dovish, or are they going to be more hawkish? So we'll see. You know, when it comes to the Bank of Canada, I think that this right here is going to tell you where we're going on this range right here. So just watch this range. And then one thing I want to be really cognizant of with the dollar Canadian, I'm on a 1 hour, let's get over to the daily, is this multi-year trend line. You know, myself and the guys in the office, we were coming up with different numbers. You know, some of them are looking at 134. I'm looking at more like 133.50, because I think you can draw the line through the wicks, because, you know, I'm more concerned with the top touch over here. So again, it's, you know, I
that's
think
also the 61.8%, by the way. The
where,
133.50.
right here. Yeah.
Yes.
From here to here.
Yes.
Yeah. So, you know, you got just 618 right there. So you know, this is all going to be really important resistance should we break out. And you know, if you're like me and you're like, well, you know, Blake, you're a dollar bear, so, you know, why would, you know, the dollar Canadian be going higher? Look, I'm an overall dollar bear. Doesn't mean I'm a dollar bear against every currency. If I'm a dollar bear against dollar bear against the euro, but I'm, more agnostic against some of these, commodity currencies. Like if I think the dollar Canadian is going up, then you have to look at currency pairs like the euro Canadian, the euro Canadian, which I think can recover pretty aggressively, especially on some risk off. Risk off, you're going to see euro buying and Canadian dollar selling. That take the euro Canadian above this 200-day moving average, probably close to 150, to 154, somewhere up here. So just again, I'm more concerned about the euro when you're talking about dollar in general, but we'll see. Okay. All right. Well, I'm gonna pass it over to you guys. Remember, today is the last day of our cyber offer. So if you want to be part of this community, you want to take advantage of like the patterns in play, our chat room, this is the time to do it. Get involved with our community, and it's buy 1 month, get 1 month free. So this way you can use it all through December and January. And with that being said, guys, I'm going to pass it over to you.
Thank you, Blake.
Thanks, guys. Have a great one, and I'll talk to you very soon.
Thank you.
You do, mate.
Okay.
Estelle, how's the drachma performing?
The drachma, oh my God. I
It
still
should be
remember
resurrected. I mean, that was the best currency ever created.
Man, I remember using the drachma, and it was a different level to the dollar every month. It was like going up and up and up and up all the time. That was fun.
Was it different colors, the paper, or all the same color?
Oh, they were different. Yeah, one was brown, the other was blue. Anyway,
All right.
First of all, before I say anything, I just want to echo what Blake said. I think Steve is one of the best, most disciplined and patient traders I know. So well done, Steve, on that pattern play and everything you do for us.
Oh, come on. It was just a trade.
No, I know, but still, everything you do for us and for everybody here on Face, and the same goes for Dale and Blake, every day in, day out, I do appreciate all of you, and I'm sure everybody here does the same. Steve is a star. Yes, I agree. Okay, so what can we talk about today? Well, we saw the headline that moved equity markets higher, which is another headline from Bloomberg saying that we are very close to a deal.
I really can't stop getting surprised of how many times a market can buy the exact same rumor again and again and again. It reminds me of the myth of the cry wolf shepherd, but after like 3 times, nobody came. So we're now at the 300th time, and still some stupid rumor comes out and the market gets bid, when every single previous time that we were so close, we're about to sign and whatever else has proved to be, just wishful thinking or
I hope they keep believing it to 3120 in the S&P, so I could sell at 3120, 3130.
Yeah, it's not a bad level.
I hope they keep believing it.
It's not a bad level, to be honest, but it's amazing. It's amazing.
It's entrenched, by the dip. I mean, everyone plays that video. People were, right? I mean, someone was sending me that video. I've seen it for years, and I know it. I hate it.
And I bet that
it wouldn't be that easy,
When they made that video, they never believed that it would be valid for so many consecutive years, right?
Yeah, unbelievable.
Yeah.
Okay. Well, the other thing, I mean, the only other currency really that's moving today is the pound, and probably the main reason for that is that more polls are coming in, and the gap is not being closed by Labour. So now we're running out of days, and there have been a couple of people commenting about this, that the Conservative majority is now looking more and more probable. And I think that's the main reason why the pound is rallying. And of course, like Steve, you said correctly, it's getting short squeezed as well, because people have been short the pound for quite some time.
I mean, we kept warning, every single one of us kept warning people that, listen, this is a consolidation here, right? There is no question about it. I mean, whoever saw this pattern and thought like, oh my God, now it's the time that the pound is really going to collapse down, probably they haven't seen enough price action. right? I mean, these type of formations after this type of a move, nothing is absolute in the markets. Nothing is absolute in the markets. But these type of formations, 60, 70% of the times, they get resolved in the direction of the previous move, especially when it's such a vertical move like the one we saw there. So we kept warning people that, listen, if you had been on the wrong side of the pound, cut your losses short. Don't get more pain for yourself. And I was still seeing people trying to fight this, right? And as I said, like a couple of days ago, if we bridge through that, I think that we can be at 133 within a couple of days. And within one day now we're at 131. So I really believe 133 is easily doable.
Yeah, I agree. And remember this, when the market's one-sided like this, it takes a long time for it to first go to neutral,
and then tilt to the other direction.
Yeah, yes, exactly. So, so that's what happened in UK. We had also some services PMI out of a number of countries, all positive except France. Actually, except France and Italy. Chinese was positive. Germany, the Eurozone in general was positive. UK was quite a beat quite substantially as well. So we're seeing some how should I say it? Some improvement in these PMIs, but it's not consistent. So it's a bit hit and miss now in Europe, especially. So, and that's it. Then we have Bank of Canada, like Blake said, later, and ISM out of the US, but really not much more happening overnight. Was pretty quiet.
Bank of Canada is going to be important. I mean, the USD CAD has clearly stalled at current levels, expecting to see what's going to happen. As we've said multiple times, this 133.50 is very key to open up any potential upside. Above 133.50, I think that this market can squeeze higher. As long as we stay below it, we're still range bound, between 130 and 133.50. So from a risk reward perspective, being much closer to resistance, it would make sense being short. But if we bridge through 133.50, you don't want to be on the wrong side of the market, because I'm pretty sure that there are several stop losses gathered up there. So that on its own should be sufficient to extend the market to the upside, at least somewhat. What are the expectations from the BOC today, Stelios?
I haven't looked at the OASs to tell you exactly, but I think it's basically they expected to do nothing. That's for sure.
Yeah. Okay.
Yeah, it's all about the comments and if they're going to sound hawkish.
Of course. Yeah.
Move wise, I think very, very little is priced in.
What is the likelihood that today's move higher in cable, lower in euro pound, is stop driven, as there has actually been a closing of polls in the last few days? Listen, we said since the very, very beginning that no matter what happens, a huge factor to the cable rallying to the upside is end up going to be one-sided market sentiment and one-sided market positioning. And that is why we have also kept reiterating that the same exact conditions apply to the Euro USD. So what part is it? It is a decent part. Okay, it is a decent part. And the same exact thing is going to happen to the Euro once it clears above like 111.80. Because then the market is going to start getting really squeezed. The smart bears that have been riding this move lower for a long time, they're going to be, okay, the party is likely over, time for me to cash out and wait for a better opportunity to be short. The stupid bears that might have sold at very low levels are going to stubbornly stay there, while the market is going to be squeezing everybody out. So I'm not saying that the Euro USD is about to squeeze people, but I'm saying that if we clear 111.80, it is going to do so. Okay, so we're not there yet, but if we do bridge through 111.80, I think that we are going to see a delayed repetition of the price action that we saw in cable several weeks ago. So, and I still see not only very one-sided sentiment and positioning, but I do see that the vast majority of the Euro bears are really, really angry about it. It's like, they're like mad with the Euro. They just, want to see it demolished. I can tell you one real story, and it's the following. I started trading, this is a weekly chart of the Euro. I started trading currencies somewhere here. I remember it was the end of this bearish leg lower from like almost 140 to down 117. It was somewhere there in time, like 2005, whatever it was. I remember since back then, people calling for Euro USD below parity. Now, keep in mind that this has been going on for like now almost 15 years, right? And we haven't seen Euro below parity. And even when we had this huge move lower and people were asking, I remember people posting polls, what is going to hit parity first, like Euro or pound and things like that. I even remember answering to somebody, okay, why don't you give us an answer? None of the two is going to hit parity because, in my opinion, none of the two is going to hit parity. And I said the same when we were testing these lows. I said the same when we were testing these lows. And if you ask me, I'm of the same opinion here as well. The Euro USD, although not far away from it, still, I believe it's not going to hit parity because I believe that the vast majority of the European Union countries that were in trouble have gotten their finances a lot more under control since the European crisis, which was a little bit delayed. The peak of the European crisis was let's say, at 10, 11, 2010, 2011, 2012. And the exact opposite is the case with the US. So we have countries that back then had, Greece was the most extreme example. Greece in 2009 ended up having a deficit of 15%. This is a number that's outrageous, it's out of logic, right? And it currently has like a 3.5% current surplus, right? Budget surplus. Portugal, Spain, even Italy, although they're not very cooperative and they have huge debt, I mean, they still keep their deficits roughly at 3%, right? The US is currently running a real deficit of around 8 to 9%. So I don't understand what makes people think that the euro has a lot more downside against the dollar than the dollar has against other things. So personally, I'm not saying that you should be a euro bull, not unless we break or until we break above 111.80. If you want to make it a round number, let's say 112. But I'm telling you, risk reward does not favor being short here, the euro. As simple as that. I mean, it looks to me like it's going to end up being one of those scenarios that you're trying to pick up pennies in front of an upcoming train, right? So that's what I think. What about the toxic derivatives still on the euro bank balance sheets? That is a valid point. And for example, banks like Deutsche Bank are kind of a mess. But what about, I mean, US banks are at a somewhat of a better position than they were, of course, when the 2008 financial crisis blew up. But the question remains, aren't there other type of bubbles in the US, for example, that are in danger of imploding? What about student loan debt? 1.5 trillion, right? Who's going to pay that money off? Government guaranteed, right? How is that money going to be paid from? Because keep in mind that, for example, one corporate debt, student loan debt, the moment we go in the next recession, all those are going to blow up. Their delinquency rates are going to skyrocket past the moon. So who's going to pay for all that? The taxpayer. How's the taxpayer going to pay for all that? By increasing taxes while in a recession? Absolutely not. There is when you're going to see the modern monetary theory come in practice. It has nothing modern about it. It's been tried again and again in the past, and every single time it's been tried, it has led to the same result. It's Banana Republic 101. So, I don't understand what gets the people being so bullish the dollar. The fact that it's going to be, a Pavlovian run to safety. There is a saying which I've mentioned before. The generals are always prepared to fight the previous war. What tells you that the 2020 recession, the 2021 recession, doesn't really matter, is going to be the same type of a crisis that was the 2007, 2008, 2009. At some point, the markets are going to stop playing ball and interest rates are going to find the real equilibrium. And when interest rates find the real equilibrium, the dollar is going to get demolished. And, that's a fact. Now, nobody can time it for sure because you have the opposing forces trying to stop that from happening. And, they are succeeding and they will keep succeeding for a period of time. But, the outcome is...
Steve, is it really a fact or is it your opinion? You're saying it's a fact.
If you want to give me one example when it ended up that things were different, that debt didn't matter or deficits didn't matter in the economic history of the planet, then we can have this discussion seriously, because every single time in the past we had people believing that they found a new way to make deficit, debt, and basic economic data insubsequential. They were proven wrong.
Well, the dollar bulls argument is all the debt denominated in dollars. If there's a liquidity crisis, people have to roll that debt. They're not rolling it in euros, they're rolling it in dollars. Demand for dollars during an economic deflationary period that could still happen to take the dollar above par. So and that's, what that is? That's not a fact either. That's an opinion.
That is an opinion, and it is
so is yours.
And it is a likely outcome as an initial response.
So all right.
So I'm going to agree with that. Initially, that might be the first reaction.
So everything is time frames.
Yes, absolutely.
So opinions can be, an opinion eventually could be right if you give it long enough.
Yes, but you always need to
go broke in the meantime.
To put things in context. For example, in my interview with Real Vision, I remember that I had made in gold the bearish case about gold. And you know how bullish I am gold, right? In the long term. I mean, you know it more than anybody else, right? And gold...
I know where you hide your physics.
Gold back then was somewhere here. It was this move lower, okay? This one. So I had my interview somewhere here. So in my interview, I said that, listen, I think that gold is going lower in the short term, and I gave some specific levels. I don't remember, but you can go on Real Vision and search by my name and you can find it. But don't misunderstand me. After this move lower is over and done, and if I remember, my target was like 1260, 1265, something like that. I maintain my long-term viewpoint that gold is going to move a lot higher. So,
listen, I just have a problem with anyone's forecast being called a fact. Okay, a forecast can end up being very accurate and right on the money, but it really isn't a fact. Okay, fact is after you look backwards. Right now, right? That's all. All right.
Yeah,
So
I mean,
I don't want
glossologically
people to
speaking,
think something's a lock, and because it's a fact, and there's no such thing because conditions are always, evolving. That's all.
what is a fact is that the buying power of the dollar has lost 98% of what
Yeah.
it was since 1913.
Yeah.
And what is also a fact is that none of the circumstances that began that downhill from 1913, which had a period of acceleration post 1971, and with the abandonment of the peg to the convertibility, the partial convertibility to gold. None of those circumstances have changed. Do we disagree on any of that?
No. I actually agree with your forecast. I just don't think it should be labeled a fact.
Okay. Yeah. Let's.
I mean, look up the word fact.
No. Let's not
You know what I
disagree
mean?
glossologically. Yes. I mean,
Yeah.
you're absolutely right
That's
about
all.
that. I have 100% conviction, though. If you want to,
okay, that's different.
If you want to call it like that, I'm 100% convinced that sooner rather than later, the dollar is going to suffer another big leg down. But as I've said multiple times, that doesn't mean you should be fighting what you see in the charts. I'm a person that believes deeply in fundamentals, but I'm a person experienced enough to also believe one thing and one thing only, that fundamentals don't matter until they start mattering, because that's how the market reacts. The market can keep ignoring fundamentals for much longer than you would expect, and then suddenly one day when you're about to give up and say, oh, come on, the market hasn't given a shit about A, B, C, whatever it is for so long, why would it do it now? And then one day it starts caring about that, and when it does, it just gets OCD'd about that. So suddenly, something that was ignored for a long period of time becomes
a tipping point.
Becomes an obsession, right? And everybody then obsesses about that. And suddenly, everybody has to shift from a long-held bias that was A to a completely, different point of view, which is B. And that is when the big money can be made, right?
Yeah.
As Ben says, the market can stay irrational longer than you can stay solvent, and this has been this is a long adage which has been enhanced even further by the actions of central banks, because in essence, central banks have helped make irrationality longer sustainable. Yes.
Normal.
So under normal circumstances, you had periods of irrationality that the market would cleanse at a shorter period of time than it happens lately. And by lately, I mean, let's say during the past couple of decades. But now with all the involvement of governments and central banks, the period that the market can remain irrational, or the markets in general can remain irrational, has definitely increased. It's not by accident.
Do you think there's a rational short in crude oil right here, Steve, with this retracement that we've gotten back? Is it back above your line that you showed, the channel line?
It is testing it, and it is a little bit again. It is a little bit above, but don't forget that we're still early in the day. So if this bullish,
this could be a good selling opportunity then.
Yeah, if this bullish looking candle ends up looking totally different at the end of the day, I think that's going to be a very nice signal that we might be starting another leg to the downside. And as I said yesterday or the day before, this type of a candle like the one we had on Friday, it's not impossible or unlikely, but it is not very likely to see the market completely ignore it and just pass through it like it never happened. So I find it kind of hard for the market to rally past 57.75 without seeing some type of rejection, even if that proves to be just another attempt to get down to 54.80, 55.
Thank you,
so
brother.
yes, I do think that it is a decent selling opportunity from a risk reward from here.
Thank you.
Having to do with gold and silver, if you remember, I explicitly mentioned yesterday 1480, 1485. We were lower on the day when that happened. That's for me a huge level. We tested that area yesterday, we got rejected. We retested that area today, we got rejected once again. This remains a huge area for me. I think a break above that is going to prove that gold has begun another leg to the upside. But until then, it pays to be patient, right? It usually pays more to be patient. Limit a little bit your potential reward, but limit substantially the chances that you're on the wrong side of the market than the opposite. So I will remain patient. As I was saying with the cable, and you can see the similarities of this price action. As I was saying with the cable, this type of price action is typical corrective price action. Does this mean it's impossible to break the downside? No, but it means that the chances are materially higher for an eventual break higher. So I remain of that opinion. I think that this price action is exactly what you expect to see in a market that was overdone in the short term and needs some time to steam off before we see another extension higher. So wait for a breakout, and I do think that you can be rewarded because the next stop is going to be the high at 1556, but I don't think that's going to be enough. I think we're going to make it to the longer term 61.8 from the all-time highs that is currently at 1586. That is also going to be in par with what we've seen with gold do against other currencies, because I remind you that we've seen gold hit all-time highs already, and we're not even close against other currencies, right? I mean, even if you have a look at against the euro, which has been stabilized since some time ago, look at gold against the euro. It did post a new all-time high. Last time we looked at it, we said that this is a correction that might be over soon. But as I've said multiple times, and those of you that listen frequently, you know my opinion on that, corrective moves are very hard to predict exactly how long they're going to take. So what could have been a shorter term correction is looking like being a little bit of a longer term correction. But look at this. Nothing has changed. Meaning, just let me annotate on this. Just compare this move higher. Just look at the nature of this move, right? Now look at the nature of this move. I mean, textbook corrective, right? Now look at the nature of that move. Now look at the nature of this move. So guess where the next move is coming to, right? There's nothing absolute in the markets, but asking me, my personal opinion, I'm not telling you what you're going to do, but my personal opinion, what are the chances that this gets resolved to this direction instead of this? In my mind, 75%. And that's a pretty damn good, bet in my mind, right? I mean, I take it any given day, right? And they would have done the same down there as well. I don't really need to be buying gold that often. I do have physical gold, and I am a European, so in essence, I have been long gold since I've ridden all this move higher. And to be fair with that, I've also ridden this move lower, right? I mean, I have physical gold since somewhere here, I would say. And I think it's going a lot higher from there. So let's clear the drawings.
Goldfinger, he's the man with the Midas touch.
Any disagreement, coach, here? Do you see anything that isn't corrective in this euro
Nothing.
gold move here?
Nothing. 1600 by the spring.
That's what I think as well. I mean, it has also started maturing in time.
Yeah.
So I think it will eventually. I mean, can we get more of this? Yeah, sure we can.
Yeah.
Right, we can. But I think that eventually that's gonna.
Well, if we got that top and it's confirmed in the end, I mean, it was pretty ugly week. Pull up the weekly in the end before we go to the interview in 5 minutes.
And I have to tell you, it was kind of surprising to me because you know how tricky the market is. It's kind of surprising that it was kind enough with patient bulls.
Yeah.
Not to trick them in buying this inverted head and shoulders formation, because
some people did. Some people thought it was breaking out at 8.5. Okay, they went with it.
Yeah, okay.
That first blue candle, you know what I mean, and then two candles is above it. Yeah, there were people trapped on buying a false breakout.
Yeah, I had since the beginning. I had this neckline drawn like this, so at least on my chart it never violated the neckline.
Yeah, that neck has whiplash now. Got rear-ended.
Yeah,
that neckline.
But keep in mind that 107.80 remains support. So in order for me to get more bearish USD yen, I want to see a bridge below 107.80.
Also, I think the yields were, there's another washout in yields. I think that's part of the whole equation of strong gold. Yeah, I think we're going to new lows in the 10-year.
I do think as well, because this formation is clearly
okay. That's bearish US dollar yen, bullish gold.
Yeah.
I rest my case. I'm Perry Mason. Anyone remember Perry Mason? No, no. Okay.
That's how it looks like.
LA Law.
I think like 165, somewhere like this.
A divorce attorney?
I have an attorney as a wife, but thankfully no divorce.
Yeah, not yet.
No, her father though was one of the top divorce lawyers in Greece. He's now
you
retired.
better be careful.
Nah, I'm not worried. I'm not worried about it. I've been with my wife for 15 years and we never even had 15.
Oh, okay.
And we've never even had like a strong fight or argument. So I'm not worried about it.
Okay. Well, it wouldn't matter if you were worried about it anyway.
Yeah, that's very true. Nothing will change, right?
You know, I go, don't tell me worrying doesn't work. Almost everything I worry about doesn't happen. So, anyway, so
that is a good point.
we have our guests, unless you want to wrap it with a few other looks for the crowd.
Yes, so 165, below 165 in yields, I think we're headed. Next stop is going to be there. The 161.8, 125 is. Let's see if we also have some type of a confluence. So if we assume that we've now seen the whole corrective move, so let's make that assumption. Let's see what that would mean in extensions. So that would mean, you see, we also have more or less at the same area, the 127% extension of that rebound. So 125 to 128, quite a nice downside support for the 10-year US yield. Okay.
And by then, maybe the S&P correction is over. Okay.
Might be the case.
Gold rally is, running long in the tooth, and we get some type of US dollar yen low.
By the way, as we're
That's good.
speaking, Euro seems to be making some catching up to what the cable was doing earlier.
Yeah.
And speaking of which, and I know that you had been closely monitoring it, the USD Swiss already gave us the warning shot since yesterday.
Yeah.
Where is it? Here it is.
Really started Friday, like everything else started when
Yep.
we went looking.
Yep. And I remind you, I've mentioned that multiple times, USD Swiss below 98.40, in my opinion,
96.
you can kiss it goodbye. Yeah, you can kiss it goodbye. We're going to see a lot more downside if that's the case. And if you remember, I had been warning since some time ago that the canary in the coal mine was the initial breakdown in this ascending wedge in the USD SEC. USD SEC,
right.
speaking of which, is also now trying to trigger this head and shoulders formation.
Yeah.
So many signals coming out here showing that
Broad-based dollar weakness.
Yeah.
I mean, that's what I mean. I was talking to Blake. Even the weakest ones were the commodity currencies, right? The Aussie, Kiwi, and they came out of the hole. And then the Europeans, and now the Nordics and the Swiss, all of it. It's broad-based.
Speaking of which, you remember how long ago we were calling this inverted head and shoulders formation, right? I mean, look at
the
it
right
go.
shoulder low. I remember the day.
It has already covered half of the distance to the the objective, which is at 66 60. Yeah, 66 and a half, 66.60. We're currently testing the 200 daily moving average, so who knows, we might stall a little bit here. It's also overbought in the daily, but keep in mind that this is a very valid inverted head and shoulders formation. So I think that above 64.30, buying any dips towards 64.30 is a damn good risk reward opportunity. We might, I mean, why not? We might retest this neckline and then move to 66.60, right?
So I see it's 4:02 in Athens in the afternoon, and at 4:02 in Athens might be time, could be happy hour. Opa! All right, happy hour in
As
Athens.
I've told you the last time I was drunk in my life.
Yeah.
It was July of 1997.
Oh my goodness.
Funny story, there was a Russian guy, probably an oligarch, because, you know, back then, especially, you know, to be vacationing in a 5-star hotel, in Rhodes, you know, one of the suites there, etc. You know, he obviously was an oligarch, but he was a very, you know, nice guy, polite, you know, family man, whatever. So we were playing volley with him. We met with him and we were playing volley the previous day. He was, of course, much older than me. I mean, he was my age back then. So he actually had an accident while playing volley, and he torn his how is it called? The one in your knee.
Oh yeah.
Yeah, so he had like a serious accident. So then he had to go to the hospital. He had to have an operation, and then he had to spend the rest of the vacation actually staying in his suite and in his balcony, etc. So, you know, we had, you know, I was visiting him, like, you know, how's it going, etc. So it was noon, and he was like, you know something, I have like the best cognac money can buy, and, you know, please join me. And, you know, I was never a heavy drinker or whatever, so he was like, no, please join me. I mean, you know, he made it feel like it would be impolite if I didn't. So after a few glasses of that in the middle of the day, I was really drunk. Thank God I had my one of my best friends, which is now my son's godfather, being there with me, so he kept me in under control.
All right, buddy. Well, good. You don't have to live with hangovers. I do. Okay, Anthony, I see you, buddy. So and Anthony's pressed for time. He has to leave. So I'm gonna promote you, Anthony, to panelist. Thanks, Steve.
Thank you, Coach.
And I'm going to unmute. You're unmuted, Anthony.
Nice. Can you hear me?
Got you loud and clear. Very nice to meet you.
Nice to meet you too. Thanks for having me.
Okay, Anthony. So there's a share function. It's a green box, and you could show us your setup and some of the things that we're going to be talking about today. Beautiful. Okay, buddy. So you're here today because somebody on Twitter in my stream said, please interview Anthony. So, you know, ask and you shall receive. And thank you for accepting our invitation to be here. How long have you been trading, buddy?
I'm 22 now. I started when I was 15. So just a little over 6-7 years.
Okay. So tell us about how you started trading at 15. Was it, you know, did you have a mentor, like maybe your family was involved in the markets, or how did it happen for you?
So actually my parents had always been in stocks, either investing through, you know, like Bank of America or like Merrill Lynch or themselves. And I remember being around them during like the crashes, and I was so fascinated by seeing things like that I started researching a ton when I was, you know, 12, 13. And I never even had, you know, money until I was 14, 15, because I got a job as a busboy and ended up being a food runner. So I got promoted a year later. But I would take all that money and I'd put it into the market, and I would just start messing around. I used to run on simulators, and I joined a cross-country track team my freshman year of high school. And my coach for that was actually he used to work at Fidelity, and one of the, like up in the like management place. So he was very familiar with options and everything. So he's the first person who taught me options. And then I went on, I do mostly options. And then I went started getting on Twitter, the financial Twitter community. And then there's this man on Twitter named, you might know him, Smarter Trader, named Samir Parikh, and he's just a fantastic options trader. And so I've been following him for the last few years, getting a lot of personal mentorship from him as well. And now I trade full time. I trade between classes when I was in college and high school, and now I run a hedge fund that I started in July.
Wow. I tell you, what's left to accomplish now at 22?
You got to grow it.
There you go, buddy. So, all right. So now the work begins. So let me ask you, I'm looking at your setup here, and I see you trade pretty naked. You just have the volume, open interest, and you're mainly an equity guy, right?
Yeah, mostly an equity guy. Sometimes I dabble in crypto or, you know, other things like that, but it's almost always equities.
Okay. All right. So I remember the tweet the day I invited you, and to me, it had a pretty bullish bias. Yeah, and you know, the people were, you know, some of your trades were working out great. Has what happened this week changed your view short term?
Yeah. So I mean, when I posted that tweet, I saw what I was seeing was a rotation into growth and value for the end of the year.
Right.
And yeah, I wrote that Roku might test high of year. It was pretty close, and then it got hit with a downgrade. Shop would break out, and this was when it was at 313. It went to 352. AYX ran a bunch. Chipotle ran 50 points. Amazon ran 70 points from those calls. So it was more just like a rotation into value or to growth from the value, because Apple, those kind of Microsoft have been getting so bought up. And that's why I also chose Amazon, because of the Cyber Monday, Black Friday, and then to keep the S&P propped up, they got to buy, you know, things all the time. And Apple's a little overextended, in my opinion. Microsoft's a little overextended for where we are in trade talks.
Okay, so you have a pretty holistic view of the market. Let me ask you if it bothered you with S&Ps making successive new all-time highs up around 3158, 3150, that Amazon, not even close to its all-time high. Many of the FANGs, I think there's a few that went with the market and made new highs, but does that bother you at all, since they were the darlings of the market for at least, you know,
the last
2-3 years, right? So so does that bother you that leadership is not confirming the move that we had in the market over the last, say, 4 or 5 months?
Absolutely. I think it'd be pretty easy for any of the leadership to come out and make an agreement on trade, or at least, you know, stop with the differentiate, like the different headlines that come out every day. I think I saw it was the 510th day of this trade war. And those headlines are, I mean, they drive the equity market, specifically tech and semiconductors. But Amazon has been really underperforming, and that's something that I think that, you know, the rotation will come into it, out of Apple and Microsoft and into Amazon. It's also nice because you know, the market dropped 2+%, almost 3% in the last 2 days, and Amazon, you know, really didn't move too much. It was about 1%. So you can see that there's not much selling going on. I think that was mostly because of Bezos's divorce and those kind of things. A lot of skepticism around that.
Yeah. Maybe he finds a nice girlfriend and people start buying the stock again.
Exactly.
So I'm looking at channels. So that one channel in the middle of what looks like, you know, some type of you know, broadening formation. Is that a pitchfork? It kind of has a look of a pitchfork.
Kind of. It's more like a parallel channel. Just because I see. So
and with a median line.
Yeah, with a median line, because you can see that's kind of where the reversal points have been. It kind of trades along this line here and here. What I usually do is, I believe strongly in trend lines over 6 months at the bottom level. I think that, I mean, as you can see, stocks love to retrace to that. If the market's in an uptrend, or even if it's volatile, you can see the overextension here, and then that creates your outward cone. And I don't use charts. Yeah, I don't use charts as my primary thing. I like to, you have to go with the news flow and the sentiment first. But when the charts,
how do you do that?
So yeah, my number one question when I trade is the first question I ask myself is, where's the market? You know, where's the S&P? How are the general markets? And that's like looking at Apple, looking at the Microsofts, the Amazon, the Googles, because they make up the largest percentage of that. And it's really hard for the market to go up if those stocks are not. I mean, Procter & Gamble, if they're not doing well, it's hard for the market to go up. So I look to see there. And then I see other growth stocks. Like I follow Shopify, Roku, Alteryx, The Trade Desk. I trade those a lot more frequently. So this is more.
They're more reflexive.
Yeah, and they're more reflective of growth and value, and it's also Chipotle. So it depends for me. Like I see a lot of rotation now coming between value and growth, and this time, especially because of all the news. And I see then there's just a ton of big moves that happen on a bunch of different names, and they're pretty similar moves. Like here on the trade desk, I caught this move up from 191 to I sold about 138 here. I didn't think it would hit all the way to the top extension, but like it did. And I thought that this move, it mimicked this pattern. So I like to trade around similarities in previous movement, seeing this growth
like value. A fractal or a repetitive pattern.
Yeah, you can see here that, I mean, this is like hedge fund buying. That's all that is. That's big algorithm buying here.
How do you know?
You could just, I mean, look at this volume. The volume is just
volume. Okay.
And the way the price action ticks, because I'm always watching price ticks. I watch bid and ask more than anything, and sometimes I watch level 2, but mostly just I watch the ticks, because you can see how quickly the bid's getting taken, ask is getting taken out, how quickly things are going to move. So, and I figured these patterns would be pretty similar, and so I sold about the 4th or 5th day, which got me about here. But sometimes the pattern continues.
What's your risk management tool?
I love to hedge so I mostly trade in my fund common shares. And if I'm not trading common shares, I'm doing options that are at least 1+ month out. And most of the time they need to have an earnings date behind them. So there's no, there's not much time decay on those. The premium sticks heavily on those. So for instance, here, I had a small position in Roku at this level. I had very, very small position. I was just nibbling because I'd sold most of it around here. And this drop down, I got in, I sold some 150, 140 or 150, 135 verticals yesterday here. I think the net was 13 points. And I mean, it could go to 150 today. It's up $4 in pre-market. So I wouldn't be surprised to see it hit this 152 level and then back to this 166. And those verticals will go to 100% net gain.
Okay, so but how do you, when you're wrong, how do you manage your risk?
Oh yeah, I mean, I have puts on all my common.
Okay, that's all right.
Yeah, it depends on my conviction for the move. If I don't believe the move is going to be happening in the next week or so, then I'll also sell higher up calls, or I'll sell out the money calls.
Kind of like yield enhancement through options.
Yield enhancement, because sometimes, I mean, Roku sometimes like extremely volatile, and you can see the consolidating patterns here. So I think I'm pretty sure I I sold a call right at this 139 level because I wasn't sure it was going to do the complete, break up back to 170s.
Mm-hmm.
Something interesting too is I look at multiple time frames. So this is the daily on Roku.
Right.
And you see this gap down. And I think Roku trades extremely similar to something like Shopify and on a different time frame. So for instance, like this is the daily for Shop, and you can see the hourly looks just like the Roku daily. It just Shopify
Impulsive.
got bought. Yeah, it got bought far quicker because of the great news behind it on Black Friday and Cyber Monday, and that's going to push up their EPS. So it's confirmation that they were going to do great on their next earnings. So people were buying like madmen. And I mean, that's why Roku reversed as well back then, because they had fantastic earnings. But the market sold off, gap down to 119. But they did a beat and a raise and a couple acquisitions during all of it. So people, they were buying in a frenzy for that as well.
Okay, so I know we've been in a prolific bull market. Gosh, I mean, you've got, I've been around. I actually marked a low in 1982 when you weren't even, your parents hadn't even met each other. So do you ever take advantage of perhaps a market that looks vulnerable by shorting it? Do you ever play the downside in markets?
I do play the downside, and that's.
Have you noticed that down is faster?
Yeah, and I do, and when I see downside, most of the time, so I have a concentration of my fund in like S&P 500 tracking. So it's either a consistency of a couple ETFs that are like ProShares ETFs, or it'll be Amazon shares, something big weighted in the market, just to have the market tracking on, and I know I can enhance by loaning out interest on it and writing calls and all that. But when the market does go down, I'm always holding shares of like a triple leveraged ETF, such as SPXU, which I don't necessarily like shorting. I'm not a fan of short interest, but I like buying things that I could long, and they'll make me.
So the bearish ETFs and they all have to some degree like options, maybe not as well. It depends on the derivative, but like TVIX has that. It just erodes and reverse splits forever. But even the bearish ETFs, and I've traded them. The Quid and SQQ and a lot of the bearish ETFs, double leverage, triple leverage, they have some decay in them, don't they?
Yeah, they do. And in fact, like, so the reason I do SPXU versus SQQQ or any of those is because that has the lowest decay over the last 2 or 3 years. So I did my research on which one had the least decay. And it's honestly worth it, because if you're ever in a situation where it's a crash, that decay will turn into like premium expansion. For instance, they're at 20 now. If the market crashes, 3%, it's going to act accordingly. But if the market crashes 10%, it could double. It's supposed to only go up 30%, but at the frequency and the volatility of the market, it could make it act twice as heavy on the upside, and rarely is it twice as low on the downside. So it's more of it's a planned risk. It's an anticipated risk for an event that I don't foresee happening. However, if it does happen, I do know that in December it was at 22 and the market corrected, and that went almost to SQQQ went to 57, and then some way higher than that as well. So
yeah, okay, interesting. So any other issues or charts that you want to share that you have biases going into year end? And I'm understanding from your last statement that you're sanguine about the market. You think this bull market is still intact. We could have 5 to 10% corrections, but your view is that there's life left in the bull. And for how long do you? No, the media is starting to talk about recession. I've never seen the media be right about predicting any economic event. So what's your longer term view on what's happening here?
Right. So I actually drew this out because I don't think that we're in a place where this line's going to break. I don't. I mean, this was capitulation at its finest right here.
Yeah, last December.
And I mean, and that is like the beginning of the plunge protection team and all these. This is.
They've been around longer than that.
Yeah. But this is. I think this is where they really they
Yeah.
showed their hand. You know, and they've definitely been
Also,
around.
don't forget the Kumbaya picture with
Yeah.
Paul and Yellen and
Yeah.
Bernanke.
So-
They were singing Kumbaya.
Yeah, this is where they said, well, all right, we fixed it, guys. Don't worry about anything.
Yeah.
So I think this channel doesn't break. And if it
Okay.
does, it won't be to the downside. And if it breaks to the upside, I wouldn't be surprised. You know, look, I mean, that's following this line, you're getting 4,000 by 2021.
I know
Yeah.
another guy who I respect's talking 4,200.
Some 3,800.
I respect it. Not that I don't respect you, Anthony. I could tell you, you know, I know when people know, but I've been interviewing this guy for a long time. That's been a long-term target of his. But yeah, that's interesting that you could come up with it. So that's just a measured move off that formation.
Off this formation. I mean, these are the biggest things that I don't follow all these technicals. I don't know how they all work, but I know that I did a thesis paper in college where I studied just upward pennants, channels, and trend lines. And I swear by all three of them, as long as the news goes in hand with it. So I think if we break down, and this is where I'm looking to buy 5x leverage, insane, get inside as much as I can. If we go to 2,500, I'm dumping the truck. I'm buying everything I can. I don't think it breaks, and I think if it breaks, the worst is going is 2,000. So it's another 20.
And you don't even have to get your parents' permission anymore.
Oh yeah, I haven't had since I was 15, really.
Let me ask you something. Are you still in your bedroom at your parents' house, or are you out there like living large, like a big tree?
I was living large, and then I put a ton of money, most of my money into my fund. And
okay,
so
you're home now?
Yeah. Well, yeah, I'm at home currently. We're rebuilding our house after the hurricane, so doing some modifications.
Oh, where are you, in Florida?
Key West, Florida. So
oh wow, I've never been there. Here, it's beautiful,
and I don't have to pay $2,000 a month in New York, so things are going well.
Yeah, okay. I look, you know, there's nothing wrong with you know, being with the family. I just thought it's interesting, a guy with your kind of knowledge, so young. I'd be at home too, until some girl convinces me.
Oh yeah, that's
right.
Funny.
How's that going for you? Yeah,
that's how it works.
Huh?
That's how it works. Absolutely. Yeah. Until some girl convinces you to move.
So are you do you want the money so you could get the girls, or you love trading?
I mean, if I wanted the money, I would have stopped when I was, making my own money. I want to make I want to make a difference to people, because I've let people in my fund with $5,000, $10,000. I'm taking money out of myself to keep it going, to start it.
Yeah.
Just because I didn't raise too much at the beginning. It was more of a proof of concept of close family and friends. But I will be raising a ton in the future.
Let me ask you, what is the entry price to have your own hedge fund? I mean, the legal fees, etc.
I mean, if you want to do it well, which I forced myself to do well, even though I could have taken shortcuts, it was about 50.
Okay.
And I mean, and that's to keep it going for a long time. That's 1 to 2 years of cost is about 50.
Do you have a name for it?
Yeah, Peak Life Capital.
After the key. Oh, Peak Life. Why that?
I have these days sometimes where I've taken some crazy trades. I've taken 100 Amazon 320s from 90 cents to $10 each. And I've bought a car, bought a Tesla off of a Tesla trade, where I bought Leaps at $4 and they went to $40. And so I just can't think, every time of those feelings, just the best feeling in the world. And I'm just like, this is the peak of life. This is where all the practice, all the hard work and the passion come together, and they make you the return. And I couldn't stop thinking of the name Peak Life. And I want the people who invest in my fund to have that, have that sense of they're going to have a peak life as well. And I think everyone should live their best life.
All right. So when I used to raise money for people, and I don't know why I'm echoing, but to me, everyone would always look at, the performance. To me, what was important is when things weren't working. What's your worst drawdown?
So I actually had a really tough drawdown in August to September. I mean, personally, I've had blow up accounts in my own account, because I do a lot of risky trading, penny stocks, options, whatever it is that I'm looking. And those are personal accounts that I used to do. My fund had a drawdown of about 10% in addition to commissions, which were a good amount due to the size of my fund being smaller. But yeah, that was the third month I was doing it. And that was right during a strategy change. So I was getting out of one strategy, getting into another. And it was really tough because I'd never really traded a large amount of shares before. I was always used to doing weekly options, these kind of things where I can get in and out, no question about it. And shares are a little different because, you know, the value might have gone down a little bit. You still have long-term conviction. What do you do when the momentum and value has the worst shock in 45 years? So I doubled down on my convicted trades, hedged a little heavier, and so that 10% decline all happened in 1 month, and then the next month I made.
I lost you.
Oh, sorry. So can you still hear me?
Now I can.
Okay, yeah. So from that 10% decline and the strategy change, it's different trading with other people's money. I'll tell you that as well.
Oh, you don't have to.
What?
You don't have to.
You don't have to, but
You don't have to tell me that it's different.
Oh, you know. Okay.
All right.
Yeah, absolutely.
So tell me about it. What's it like for you? Do you feel more pressure
Yeah,
because it's not your own, and do you actually feel emotional when you were going through that 10% drawdown where you may not have blinked an eye, but people call you and say, "What's going on, Anthony?" What do you tell them?
absolutely. And in fact, I'm straight up with my investors. I let them know where we are. And I tell them, like, I've had these things before. The last 4 years I made 50% on average in all my accounts. So when I tell them there are months where I'm stagnant, there are months where I'm down, and then there are months where I do a 50% return in that month or a quarter. It really just depends on the market and the way that I'm playing it. And so during that 10% drawdown, I definitely did get some emotions, but I definitely did get a little worried as well. But I was only worried about how my investors would feel because I care about how they feel. I had complete conviction. And the fact that I went after that month, that was October, I returned 3% in November and then 8.9% in November. So that was my best month yet. And being able to bounce back so quickly, I think, is a great thing to show my investors too. Be like, and especially due to the allocations I had at the time, I was heavily invested in growth, and that was a significant drawdown. Most of the names I just showed you went down 50%.
Okay, so what's the best way for people to, now that they either heard you live or they're going to see the video, best way for people to follow you? Is it Twitter?
The best way would be Twitter. Yeah, absolutely. I have a website as well.
Okay, why don't you show it?
peaklifecapital@gmail.com.
Okay, you want to show it?
Yep.
You know, at 22, you're not close to your peak in life, right?
Oh yeah.
And do you have a beard?
Is that
you? Is that you? The caricature on your image?
Oh yeah, that is my okay, yeah. So my website's currently down. I'm doing renovations on it. I'm adding a blog to it.
Yeah.
But yeah, if you find me on Twitter, you'll be able to contact me there. I actually have to run because the market's about to open.
Go ahead, buddy. All right. Well, thank you very much, Anthony. Great meeting you. And like it or not, you're now my trading warrior brother. Okay.
I love that. Thanks, Coach.
All right, buddy. Okay,
Appreciate
that's a wrap, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Crude at 57.80. S&P is rallying, and some nice setups here. So good luck, everyone. Remember, today's the last day for the cyber sale. And we'll see everyone tomorrow for investing.com Thursday. Adios. You're welcome, Brock. See ya.